While everyone was chasing meme coins and prediction markets, something else was quietly growing in the background. Real-world assets, or RWAs, have quietly grown into one of crypto's biggest sectors this past year. If they've flown under your radar, you're in the right place. We just dropped our 2025 RWA report, and in this video, we're breaking down the highlights, what changed, what mattered, and where things are going. So let's dive right in. First, let's zoom out and take a look at the big picture. One of the clearest signs of RWA growth. Fiat-backed stablecoins kept climbing. They're still the backbone of RWAs and show no signs of slowing down. USDT and USDC are holding the lead, while new names like USDTB from Ethena and USD0 by Usual Protocol are starting to gain momentum. Tokenized Treasuries also had a breakout year, with institutions finally stepping in. A big part of that came from the BUIDL fund. Private credit's been making a quiet comeback too. It hasn't hit its 2022 highs yet, but the upward trend is finally taking shape. It's been a busy year, and a few standout moments shaped the space. March 2024 kicked things off with the launch of the BUIDL fund from BlackRock and Securitize. It quickly became the go-to example for how on-chain treasuries could work. Then, Backed Finance rolled out a platform focused on tokenizing private funds and other real-world assets. In August, MakerDAO rebranded to Sky Protocol and gave its long-running stablecoin a new name, USDS. October saw Ripple jump into the mix with RLUSD, a bond-backed stablecoin. By December, Ethena launched USDTB, a stablecoin backed by BUIDL tokens. Then things picked up even more in early 2025. In February, Ondo Finance unveiled Ondo Global Markets, a platform to tokenize stocks, bonds, and ETFs. April saw a bit of turbulence when Mantra's tokens saw large liquidations and a sharp 90% price drop overnight. But it also saw the launch of USD1 by World Liberty Financial. It's a stablecoin that's backed by treasuries, cash, and equivalents. June closed the first half of 2025 with a bang. Circle went public at $82 per share, a 167% jump from its IPO price. There are also some new developments with new RWA-focused layer 1s. That same week, Plume's mainnet went live to support new asset classes and use cases. Then Plasma hit its 500 million deposit cap within just 1 hour on Sonar. On the regulatory side, the Genius stablecoin bill was passed by the Senate. Fiat-backed stablecoins just couldn't be stopped this past year. From April 2024 to April 2025, this sector added nearly 97 billion in market cap. That pushed the total to a new high of 224.9 billion. It kept climbing, and by June, it crossed 232 billion. USDT and USDC were behind most of that growth. USDT added 56.3 billion, and USDC added 37.6 billion. Together, they made up over 93% of the gains this past year. USDTB and USD0 also stood out among the newcomers. By April, USDTB reached 1.4 billion in market cap, and USD0 hit 600 million. Both have held steady since. Growth with commodity-backed tokens was slower, but still solid. The total market cap rose 774 million year over year, hitting a high of 1.9 billion. Rising gold prices driven by geopolitical tensions played a big role. Tether Gold and Pax Gold still lead the pack, making up about 84% of the market. By June, the sector was leaning closer to the 2 billion mark. Which sector do you think grew the biggest? If you said tokenized treasuries, you're spot on. The sector's market cap shot up from under 1 billion in early 2024 to 5.6 billion by April 2025. March alone added 2.3 billion, which was partly triggered by new US trade tariffs. By June, the total hit 6 billion. Since its launch in July 2024, BlackRock's BUIDL has taken the lead. It's holding on to about 47% of the market right now. Private credit is slowly finding its footing again. In April 2025, active loans totaled 547 million. By June, that number jumped to 924 million. Still below its 2022 peak of 1.6 billion, but clearly heading in the right direction. Maple Finance is currently out in front. Its active Active loans grew to 374 million in April and continued on to 768 million in June. It also launched Syrup USDC, a fiat-backed stablecoin meant to expand its RWA offerings. Centrifuge used to be a key player, but after shifting focus to tokenized treasuries, there's a gap in the private credit space. Over in tokenized stocks, this corner of the market is still in the early innings. As of mid-2025, tokenized stocks sit at just 11.4 million market cap. Small, but interest is building. Kraken is prepping to offer tokenized US listed stocks, and Coinbase is exploring tokenizing its own shares. Backed Finance holds 77% of the market share thanks to its tokenized S&P 500 product, and Denary accounts for the other 23% of market share. There's been movement across the broader RWA landscape too. New chains built just for RWAs are popping up with different approaches to compliance. Some are fully public, others layer in KYC to meet regulatory standards. Plume was first to launch and more are coming. Real estate tokenization is also making a comeback, at least in the Middle East. Mantra teamed up with Dubai's Demac Group to tokenize real estate and hospitality assets, and XRP Ledger is working with the Dubai Land Department on a tokenization framework for the region. Collectibles had a mixed year. The closure of Nike's RTFKT and G-Money's 9DCC did impact the space, but a new platform called Collector launched and helped to renew interest. On the policy front, the EU rolled out MiCA, giving crypto firms a clearer licensing framework, and that led to USDT being delisted from some European exchanges and Tether sunsetting EURT. A few European banks have launched their own stablecoins, though adoption is still early. Central bank digital currencies are also a hot topic. The EU's digital euro,
a digital currency where it has been piloted, is of use and of service,
and Hong Kong's EHKD are both in development. And like I mentioned before, in the US, the Genius Act has opened the door for traditional finance to explore stablecoin offerings. What could be next for RWAs? Stablecoins are edging closer to the mainstream. Standard Chartered projects the market could top 2 trillion within 3 years. Tokenized treasuries with a compliance-first approach are making it easier for institutions to join in. So demand is likely to keep climbing. Private credit could see more momentum as new developments could help close the gap between DeFi and the real world. We'll be keeping a close eye on what's next for RWA, so let us know what you're most excited about in the comments. Now, for a deeper dive, make sure to check out the full 2025 RWA report. It's right there in the description. And if this video helped you make sense of the RWA landscape, don't forget to like and subscribe to stay updated with everything crypto.